Hello everyone, welcome to the market snapshot for today. So overall the market remains pretty stable, pretty consistent to what it is doing. US looks a better market than compared to India, but then again that does not mean that India looks weak. India is looking equally very positive, very strong. So Nifty 50 is at 24,471, Nifty 500 at 23,681, Nasdaq 100 at 29,525, and S&P 500 at 7728. This is Nifty 500. The advances were 191 against declines of 309. New highs 14 against new lows of 486. And the breadth is stable and not gaining momentum, not losing strength. So pretty much stable, I think, reacting to how, the global macro play is playing out at this point of time. So overall, the markets are good. There are very, very good strengths in definitive sectors. Uh, if I talk about the Indian context, I mean, IT has recovered a lot, reality is doing good, but the strongest of the lot is healthcare, auto, and consumer durables. These are very, very strong sectors, indicating that a lot of strength is now moving towards larger cap, broad cap uh, indices, which towards hard assets or real assets, which really move the economy. So a lot of very strong pockets, not something, at the same time, a lot of very weak pockets as well. And that is the reason I have been talking a lot about the kind of exposure you should be having if you are a new entrant in the market. So overall, if you look at the chart, Nifty 50, a strong looking chart. This entire, rally was very, very good. Now, while this pullback is happening, again, I mean, we could have expected a better numbers, but then it is doing pretty fine, I would say. And I think once this breakout happens, maybe we see a huge momentum in Nifty 50. Very similar looking chart for Nifty 500. I would say little stronger than Nifty 50. And the data has also been more supportive to Nifty 500. I mean, the deterioration in Nifty 50 at this point of time is little poorer than compared to Nifty 500, and that is the reason this is much better indices. So overall, the Indian markets Nifty 50 looks bullish. Participation has been weak, and the breadth is strong. And for Nifty 500, bullish, participation weak, and breadth is mixed. So overall, I have been saying, the Indian markets are looking good. If you compare globally, also I think the Indian markets are looking strong. It is just that they cannot move in isolation, and that is the reason we keep seeing a lot of volatility. But dollar has subdued. Maybe that is helping to the rise. At the same time, I think the good part about the Indian economy is it is a lot self-driven or domestic driven, and that is the reason, while the volatility has been extreme, and still we see a lot of pockets of strength, and maybe that is the reason, like I am saying, a lot of money is moving towards more reliable defensive, or real sectors, which really drive the economy towards those kind of sectors. While in March, April, that was not the case. I think a lot of liquidation was moving towards broader cap, small caps, micro caps, but then I think at this point of time it is moving towards more towards real assets. So overall good, overall a strong looking market. It is just that I would say, if you are holding on to position, just keep holding on with your stop losses. If you are a new entrant, look for an exposure not more than 50 to 75%, because there is a lot of strength in the market, but the problem is there is a lot of weakness as well. So it is, you can say, it is aggressive and defensive at the same time. So you need to find a balance, and the best balance which I can think of at this point of time is having an exposure of 50 to 75% if you are a new entrant. Now this is Nasdaq, this is S&P 500, the strongest looking chart. I mean, strongest looking not in terms of today. It has been the strongest looking chart from maybe the month of June. The data has been very supportive of the rise. Amongst everything which I track, this is one of my favorite indices at this point of time. uh, Advances 276 to declines of 224, and new highs 22 against 478 new lows. And the breadth is very very strong, very very stable, very very consistent. Above 20 EMA 319 stocks, above 50 EMA 320 stocks, above 200 EMA 353 stocks. And this is the chart of Nasdaq 100, very strong looking chart. And I think a lot of strength has come back, not only in terms of chart but also a lot of data has supported this rise. uh, so I'll be literally positive about this chart only once this breakout happens above 3500. Till then, at this point of time, S&P 500 remains my pure bet. To me, this is the strongest looking chart of everything which I cover. I mean, this chart somehow never lost momentum, even if this we had this slight bit of volatility in this range. But then the numbers never faded away. I think a lot of liquidity from Nasdaq 100 and Russell 2000 started moving into this indices, and that is the reason I think the kind of liquidity this S&P 500 might have soaked in, I don't think it would deteriorate very soon. So I'm really bullish and on S&P 500. Russell 2000, again a strong looking chart. The numbers have been consistent with the rise. Uh, Overall good structure, good numbers. But like I said, for me, for the US market, it is S&P 500 at this point of time. The overall summary from the US market: Nasdaq 100 looks bullish, participation is weak, breadth is strong. S&P 500 bullish, participation mixed, and breadth is strong. Russell 2000 bullish, mixed, and is strong. So if you see, the breadth is very consistent, and that is the reason I told that at this point of time, US looks a better market compared to Indian market. Indian market is very good, but then you'll have to scout. It is not randomly available that you buy anything and it will work. I don't think that is how it will work for the Indian markets. So is the case with the US market, but it is just that strength point of time. I think strength point of view, I think US looks a better market at this point of time. So what are the global indicators telling us? The yields are not falling. That is the biggest point of worry for the equities market globally. Dollar has started helping, and that is the reason we have seen this consistent rise, be it in the US market or the Indian market. VIX 1528 indicates neutrality, which I don't believe. And Bitcoin, like I said, Bitcoin has been uh, for sure is getting accumulated. I don't know if it is accumulated to break out or to break down, but for sure a lot of accumulation is happening in Bitcoin. So better watch out, keep tracking it daily. And gold is looking very promising. Whatever sort of trader investor you are, if you're looking to hold on positionally, I think very good opportunities. If you want to trade, I think very very good opportunities. So gold is a very very good bet to have at this point of time. So like I said, I think this for sure, which is dollar, is helping to the rise of equities market in India and the US markets, and a lot of emerging markets as well. So this for sure is helping. This is getting accumulated. I don't know if it is getting accumulated to give us a breakout or a breakdown, but for sure it is getting accumulated. So this should be in your watch list. And gold is looking very promising. Like I said, uh, I think a lot of strength, positive momentum is available to trade, to invest, anything which you wish to do. And I mean, people might be looking for, if you're looking to have a positional bet, you literally you should not be, trying to time the market, basically get into anything. The kind of structure gold has, even if you want to, get into an SIP form, that should be helpful, so that, your pricing becomes better. So overall, like I have been saying, for the Indian market, if you're a new entrant, have an exposure of around 50 to 75%. Same is the case with the US market, exposure of 50 to 75%. Gold is giving very good opportunities. Bitcoin is getting accumulated, should be in your watch list. For the Indian markets, I think look for indexes like auto ancillary, consumer durables, healthcare, reality, IT. These are good sectors. I mean, sectors which have really formed the Indian economy. Those are the sectors where you should be focusing on instead of getting into micro caps and small caps. And for the US market, again, defensive sectors, large cap tech, healthcare, financials, these are the sectors which you should be looking at. So overall, good markets, positive market. It is just that you cannot be, uh, you cannot be blindfolded and taking bets. So the little cautiousness is needed. Uh, that's everything from today for today. I hope you all found this useful. Thank you so much and have a good one. See you next time.